Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larby.
Seth, welcome to the show. How are you?
I am fabulous. How's it going with you?
Good. While you're saying that, you're probably thinking of all the planning that you've got to do for this upcoming multifamily conference. It is going to be huge, but I will say, for somebody that, I know how hard it is to put a conference together. I mean, we did it on a smaller scale. I'm still doing it myself as well on a smaller scale, but you're like going all out with this conference.
Yeah, it's pretty crazy. Like Katie's got my schedule in like 15-minute blocks. So every 15 minutes is accounted for from morning until night. So it's pretty crazy.
I mean, that's incredible. Now, you know what? While we are on the topic, let's just talk about the multifamily conference, what it is, and who's coming, and why somebody listening to this may want to also attend.
Yeah, so basically the conference came out of I felt the lack of educational material in the Canadian marketplace specific to apartment building investing. Like when I was making the transition from single family home stuff into multifamily, I was like, there's nothing in the country really where you can go and where they have like top tier speakers and you get everybody together. So that's where it came out of. So this year, like we are Canada's largest real estate investing conference. We're really big. Last year was great coming out of COVID. This year we got, I think, an even better lineup. So we got like Grant Cardone coming in, Alex Rodriguez, like most people know him from baseball, Shark Tank, but also with real estate, like he has about 15,000 apartment units in his portfolio. Janet LePage, she's the CEO of the largest foreign investor into the U.S. multifamily market. We got Brad Sumrock, the list goes on. Like we've got a star-studded lineup. So basically, if you are in the multifamily investing space, or if you're looking to scale up your portfolio, like you need to come to this conference. It is the biggest event in the country happening this year.
Amazing. I'm excited. I remember going last year, and I can only imagine, now with a whole other one coming. We're out of the pandemic. It's going to be a great, great experience. So, what about the networking? Like, what can we expect from a networking standpoint?
Yeah. So one of the most common comments I got, because my phone blew up for a couple of weeks after last year's conference, was everybody was talking about the high quality of the people in the room. So like, oh, like these people were actually really cool to talk to. Like they got this. So if you're listening right now and you're looking for a potential investor, if you're looking for a potential partner, if you're looking for a potential deal source, whatever it is, I promise you, there are other people in the room. We've got thousands of them looking for you. So it's all about matching. It's kind of like dating for real estate investors. But whatever you're looking for, I guarantee you there's somebody else in the room looking for you. So the networking is the main thing. And that's why, with COVID and everything, like everybody went online for all these virtual events. The real networking, like the real connections happen in person. And that's why I'm very stubborn and we do not have a virtual ticket for this event. You have to show up because I truly, truly believe like that's where you actually make an impact face to face.
No, I agree as well. There's nothing like networking in person. And I think, attending various events, including this one, it's nice to see familiar faces, reconnect with people. Like, I think that was my favorite part of it last year, was the networking, reconnecting, getting to know people, meet people. And of course there's great speakers. I'm not going to, take away from that, but me personally, I love the networking part. And, that's probably the predominant reason why I go to many networking events or meetups or conferences or whatever you want to call them, is to connect in person with like-minded individuals.
Yeah. And last year we had every state except Alaska and every province represented. And this year it's the same thing. So we've got people that are coming from all over. So the one cool thing is, if you're focused on one specific market, you may end up talking with somebody who's running a slightly different strategy in a similar market, and you can learn from that. Or maybe somebody can introduce you to an opportunity in a market that you hadn't really considered before. Like there's so many different opportunities to expand your mind and how you think about real estate. Like when you come to this event, like we had people last year, one guy, he emailed me a couple weeks, 2 months ago. He came in, he thought he was basically retired. He was done. He was set for life with his real estate portfolio. He came to the conference. He's like, oh crap, like these people are doing even more. So he's basically 3X'd his real estate portfolio since last year's conference, just because he saw what else was possible. He had no idea. Like he thought he had tapped out, and now he's just gone gangbusters and is growing even more. So that's the type of experience I'm looking for our attendees. Like I want to show you what else is possible, what you can do, and really open your eyes.
Amazing. All right, cool. Well, that's awesome. So we're gonna add a link with a coupon code, and it's gonna be Sarah, all capital, on the show notes. So if you do want to get a ticket, and I believe it's a 10% discount, right? That my listeners get.
That's right. But make sure you get your ticket now, because last year Platinum sold out, VIP sold out. We are sold out of VIP. I actually put my personal block of tickets up for sale now, and then Platinum we're like 80% sold out now. So you got to act quick, because last year there were some people who were disappointed.
Absolutely. Okay, cool. So multifamily seems like it's now even more so making more and more sense to go that route. The new MLI Select program with CMHC that a few people, I'm sure that our listeners have heard me rave about recently. But I also think based on the rates that we're at right now, interest rates, the prices, it does make more sense to go the multifamily route, whether that's bigger, larger multifamilies or that's conversions. I love the conversions as well. It could be 3-4 unit conversions. It could be multiple. We're working on a 22 unit conversion as well. So it really depends. But I think that is where the next, I would say 2 to 3 years, where it likely makes sense to really focus efforts and acquisitions on. What are your thoughts about that versus single family?
Yeah, like I can just speak from my own personal experience. Like I remember we had this one duplex, and the drain out to the sewer, a tree root had gone through it, and it was causing like backups in the basement apartment and all that kind of stuff. And when we got it looked at, the repair cost was $8,000, and that basically wiped out 3 years of cash flow for this one property, right? Because we were in we were in the GTA in a pretty hot market. We had lots of equity available, but we couldn't access it because of the financing requirements for residential real estate. That in itself is a case study for why I got out of that and switched over to multifamily. The financing is way better with the commercial multifamily. The cash flow is a whole lot stronger. Sarah, do you know a business where if 50% of the revenue disappeared overnight, they would survive in a business?
Not
No,
many.
but that's the case. Like if you have a duplex if your tenant moves out in a duplex, like 50% of your revenue is gone. So to me, when I started learning about apartments, like when I first started, I thought apartments, you had to be super rich. You had to be a big life insurance company or a big corporation to actually thinking about owning an apartment building. I was really wrong. But once I started learning more and more about it, I was like, oh, you know what? Like this makes a whole lot of sense. Like, why would I do a duplex when I could do, let's say, a 10, 15, 20, 30 unit building? Like the economies of scale are that much stronger. And there's so many reasons to consider it. So yeah, like for all the reasons I mentioned, like I had no idea about this kind of stuff. And that's why I created the conference, to actually get the word out there and educate people, because I knew nothing, and I had to learn the hard way.
Yeah, absolutely. Now, are you able to share a little bit, what you've been acquiring, what you've been purchasing, since I guess the last conference? Because you were heavy in the U.S. multifamily, and I
Yeah.
guess you still are. But maybe just give us a synopsis of this past, I would say, 12 to 18 months.
Yeah. So we've got something really, really top secret. We are
Okay.
launching at the conference. It's really, really exciting. But yeah, it is focused in the US. And we're looking in the Sun Belt plus Texas. But basically what we've created is the most efficient way for Canadians to invest in US multifamily real estate. So, because we've got cross-border taxation issues, and that was one of the things when we were speaking with our investors, is like the way we were structured before, which is how most people do it. It's really complicated, and there's a lot of paperwork and all that kind of stuff. So we've created what I feel is like the most efficient, easy, simple way for Canadians to invest their Canadian dollars into US multifamily deals. And yeah, I can't talk too much about it because it's a big surprise. But I'm really, really excited for that to go live in about a month's time.
Okay. All right, cool. So I won't ask too many questions about it. Then you guys will have to come out and check it out. What about you
Yeah.
personally? What are you acquiring? What are you buying? Are you still buying? Are you going to this new route that you mentioned now, or are you still like sourcing out, larger multifamilies in the US?
Yeah. So our focus is still the larger multifamilies, 100 units plus. That hasn't changed.
Right, sorry, a hundred units plus?
Yeah. So
Okay.
we're going for the bigger stuff, like value add deals. And yeah, like a couple of things to note over the past, let's say 6 months or so. Deal flow hasn't been very like strong because we've seen that market correction. But we are very, very positive about the next 6 to 18 months. The reason I say that is right now we've got a lot of operators who acquired their assets a year ago, 2 years ago, using bridge debt with the business plan of, renovating the units, rolling into conventional financing and holding for the long term. But what's happened now is, values have gone down a little bit. The rates have gone up. So now those operators stuck with short-term bridge debt, which is really, really expensive, they can no longer roll into conventional financing. Like they're basically stuck. So they have two choices. Number one, they hold it and pump a whole lot of money into a losing asset. Or number two, they sell, cut their losses, and move on. So I think right now we're starting to see that with some blood in the water. And we just had a big foreclosure in Houston. I think more of that is coming, and that's why coupled with our top secret thing we're doing, we are very, very much looking forward to the next 6 to 18 months because I think that's going to be prime season to pick up some great assets that just really had the wrong type of debt on it.
Got it. And are you just looking and buying in the US, or is there any action in Canada?
Yeah, for me personally, there's no action in Canada. We're strictly US focused right now.
Okay. All right. So obviously you've been doing quite a bit. I mean, even prior, I think you were still acquiring quite a bit. What are some challenges that you're seeing yourself that you've maybe experienced in the last, year and a half as the market has changed, as interest rates are getting higher and higher? Because I think, there's still a lot of just like rah on the internet, on social media, and it's not all that all the time. And I think it's just important that people realize that people's cash flow, a lot of investors that have been in the game, is not where it used to be, especially if they were in variable rates. Doesn't mean that it's completely gone, but there are some properties likely in the red, and there's going to be some properties that are, probably had some great cash flows that aren't anymore. And what are you potentially doing to mitigate it? But I don't know if that's something that you're experiencing, but maybe you could share some of the struggles, some of the challenges that you're seeing on your end.
Yeah, no, I think it all comes down to underwriting, right? Like, when you're looking at a deal, I think over the past couple of years, some people tended to push a little bit more and then they should have just to win the deal. And it's one thing to do spreadsheet numbers and it looks nice on a spreadsheet. It's really easy to change like a 4.5 to a 4 or whatever it is. And that changes the spreadsheet. Making that spreadsheet happen in real life is very different. So, we've seen a big shift, right? So a couple of years ago, intense competition. You put an LOI on a property, you put in an offer, there's like 10 other offers. It's insane. It goes way over what you thought it would be worth. And you're leaving yourself wondering, hey, like, how does this deal actually work? How are these guys making money? We've now gone like the other way, depending on the market. Like some markets are still quite healthy and are rocking and rolling. Other markets, we've seen a pullback. But now it's like, okay, the challenge before was there's other offers and everybody's competing. Now it's the challenge is, well, these sellers are still living a year and a half ago in terms of values, and there's no way this deal works. But you put in an offer and then they'll call you back in another 3 months and say, hey, listen, like we're still in the market. Like, can we work something out? So your strategies are just changing. But what I don't think should change or has changed is how we're approaching the underwriting process. Like we tend to be pretty conservative in the underwriting. Like we don't want to promise a refinance in year two, because as we have seen in the past little bit, those refinances are never guaranteed. Um, so like, if the deal doesn't work without a refinance, does the deal even work at all? Probably not. But, a year and a half ago, people were putting that in their underwriting because they thought it was a sure thing. So I think this is a good wake up call, or a good flashing red light being like, hey, listen, like we got a little bit too aggressive, and it's time to like go back to the basic foundations of underwriting, make sure we're using real numbers, planning ahead for any type of market correction. Because if you're holding an asset for, let's say, 5 to 7 years, there's going to be some choppy waters. So how are you modeling that in your underwriting?
Yeah, some great insights for sure. So like, somebody listening to this, is probably super, super interested in how you've structured this, right? Because here you are in Canada. I'm guessing you are raising funds, from different investors across the country to put into your projects. What kind of structure does that look like?
Yeah. So previous to this top secret thing coming out, we were following the syndication model. So basically, a syndication is done on a deal by deal basis. So Sarah, like let's say you and I acquired a 100-unit apartment building and we had to go out and raise $10 million. We would raise that for the LP, the limited partnership, in the syndication. Those are passive investors. So we would be looking for accredited investors who meet the criteria. So $200,000 a year income, 300 as a couple, or $1 million of net assets. And we would be raising checks from those investors to invest passively in the deal. The cross-border situation, that presents some challenges because we want to avoid double taxation. So any Canadians listening right now, 99.9% of the content on the internet is geared towards Americans. So make sure you're working with an operator who actually understands the Canadian aspect, because that's really, 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 really important. But yeah, the structuring is it's a little bit more complex, and you need to have some solid cross-border accounting advice. But yeah, that's basically the structure we were using. And then the general partnership, the GP, those are the people actually running the deal. So in this case, in this example, it would be you and myself holding the GP shares. And we would run the deal. We would acquire the deal. We would put it under contract. We would firm it up. We would have our business plan. We would then raise the money with maybe a month lead time. And then we would close on the asset and start implementing the business plan.
Okay, very cool. I feel like, and you don't have to answer, but I'm just going to take a guess that you're going to create a fund. You don't need to tell me yes or no. It's all good. We'll figure it out at the May events, the multifamily. But as you're saying this, I'm just kind of like, maybe it's easier to have that money ahead of time potentially and paid like something on it. I don't know.
Yeah. So I can't confirm or deny.
Yeah, no, that's all good.
But yeah. So the way we're approaching it is, we feel there's prime buying season coming up. And there's a couple efficiencies if we were to use a fund model. Number one, you've got the money there, so you can act quicker. And if an asset is distressed, like I think we're going to start seeing, we can act a lot quicker than having to raise the money in a month to month and a half. Like it's a whole lot more efficient. Number two, we're able to open this up and make it more accessible to more Canadians. So using the syndication model, we were pretty much pigeonholed into working only with accredited investors. With our model now, for Canadians, you'll be able to use registered funds, so that, RSPs, if you're stuck in a mutual fund, you're now able to invest that. And non-accredited investors, we would be able to accommodate those investors too, which sometimes get left out of these opportunities. So we're just trying to make if we were to do it, it would be the most inclusive fund possible for Canadians, and making it super, super simple. And plus we have the US side, which is a little bit different, but for Canadians specifically, yeah, 100%.
That's cool. I'm hearing more and more. I mean, the investors that are like heavy, into this kind of stuff. Like, there's a few people creating funds out there, so it is
Yeah.
intriguing. It's interesting. I would say, like maybe joint ventures and JVs are like the starting point, right? That and then you move into like the GPLP structure, and then you move into the funds. And like I can tell you, it's quite complicated. You definitely need a good team and a good lawyer and et cetera, accountant and whatnot.
Yeah. You don't want to know, you don't want to know what we've paid on legal and tax advice. The charts, the org charts and everything get quite complex because
Wow.
of the
I'm gonna
cross-border
assume
issues
it's
and all of that.
probably at least over 100 Gs.
Oh, keep going.
Yeah.
So
Well, I
yeah,
mean, that's the thing,
it's quite
right?
complex. Yeah.
I mean, if you're looking at a JV agreement, I don't know, like maybe it'll cost you a couple grand or whatever it is, depends on your lawyer. And then your GPLP structure
Yeah.
is what, like 6 figures just to get it set up. That's without the fund, just GPLP structure around.
Yeah, depending, like in the US, like, yeah, if you get a syndication guy to do it for maybe 50 grand or something like that, just the basic bones. But
Yeah.
then you add in the accounting and all that kind of stuff with the cross border. Yeah, like we are significantly higher than that. But we're working with some top tier firms, because they know exactly what they're doing. They've done it before. We're just making our own tweaks to the model to create what we feel is going to be the best product out there for Canadians. So yeah, that's kind of what we're doing. Really, really excited, especially for the market conditions coming up over the next 6 to 18 months. Like I think we are, which is one of the reasons why we're doing things the way we're doing now,
Mhm.
because we want to take full advantage of it.
Yeah, no, absolutely. And I think it's just important for people to be like, oh, I want to do this GPLP structure, but like they don't realize how much money it costs. And like it has to make sense for the size of deals that you're doing. It can't just be like a fiveplex. Like that would that would just
Yeah.
not work at all whatsoever. But
Yeah, like you have to consider a lot of things, right? Like what's your cost of capital? And depending on how you're going to source the capital, like that's going to vary the cost, how you structure it, that's going to change how efficient you are in terms of the raise. Like, if you're doing a triplex and you need some money for it, like just finding a partner is the most efficient way to do it. Like the structuring, like that's the best way to do it. I also have people who I know that it's four guys and they'll buy these like 250 unit apartment buildings just among the four of themselves because like they all know what they're doing. They're all contributing monetarily and they run it as a group. They're not going to syndicate the deal because the deal doesn't call for it. They're going to partner on the deal, create a joint venture agreement, and that's how they do their deals. And we're talking tens of millions of dollars for these deals. So it's not really like the way I approach it is like you have four ways you can buy an asset. Like number one, you just buy it all yourself, which is preferred, but most people can't. Number two, you partner with somebody. Number three, you syndicate it. And number four, you acquire it through a fund. Depending on the situation, like you can choose one of the four. Sometimes two will work. But it's yeah, like you have to think about it. If we're buying a 50 unit apartment building, we're not going to raise money as a joint venture. A lot of people got in trouble for doing that. There's one case I know of that made some national headlines, but I still know people doing it where you're actually contravening the securities legislation by having a whole bunch of partners in the deal. Like if something goes wrong and somebody files a complaint or a report against you, you're toast because it's very clear what you're doing. You're basically syndicating the deal without syndicating it. There is absolutely no protection for you if you're structuring your deal that way. So it's just so important to get the legal advice from your
Mhm.
securities attorney. Even if you're not syndicating or launching a fund, you may actually find out that you are indeed syndicating without doing it. And you're selling a security. And if you haven't done the proper paperwork, then you're toast. So that's a very long answer, but you have to, number one, look at the deal. What's best for the deal? Then you have to look at the cost of capital and your efficiency and how you're going to deploy that. And then you have to look at legislation, is what you're doing. Are you actually selling a security? If so, you have no choice. You have to go that route. So yeah, just be careful, talk to the lawyer, sit down and don't just talk to any lawyer, not even just like a real estate lawyer. You have to be very specific. Talk with a securities lawyer because they will be able to help you out with the security side and the money raising side to make sure you are compliant.
And likely a good real estate investing lawyer might have a connection that they can share that they might have worked with, so if you don't know where to start for that, because it is still a separate lawyer than your real estate investing lawyer, then maybe just start there and see what recommendations and people that they can suggest and have a conversation.
Yeah, like you wouldn't go for heart surgery with an ear, mouth, and throat doctor.
Right.
And it's basically the same thing, right? So make sure you're talking with that specialist because a couple people have reached out to me and they're like, "Hey, listen, like I got this advice from this lawyer." It's like, "Oh, okay, that's odd. Like, what kind of lawyer is it?" "Oh, just like my regular lawyer." Well, number one, they shouldn't be giving you that advice in the first place. They should be saying, "Hey, listen, this is outside my area of expertise." And number two, like they should be referring you to somebody, like you mentioned, instead of giving you something that's probably wrong.
Absolutely.
Yeah.
So what's for your event, what are some of the topics that you are going to be covering? I mean, I know Dahlia's speaking about financing because a little like preview. We did some shoots for a video that she is going to be presenting to everyone.
Nice.
So that was fun. We did a few properties. But aside from that, where and what are we supposed to be excited about? I'm sure there's lots and lots of great speakers, but what are some topics?
Yeah, we basically covered the full breadth of multifamily real estate investing. So that goes from financing, like you mentioned, to raising capital, deal structuring, creative financing, how we're underwriting and analyzing deals, how we're going to manage the deals, how we're going to manage renovations. Everything is covered. Syndication, funds, joint ventures, you name it. I've made sure the speakers I've picked, because like I handpick the speakers. I've made sure everybody is covering their like a specific component of multifamily investing. And like let's say you're listening right now and you have some experience in real estate, but you're new to multifamily, or if you're brand new to real estate investing, what we're doing this year is we're hosting a full day workshop just for beginners in multifamily. So that's all day Friday. It's myself and a bunch of my friends, and we're going to be teaching you the basics. So that way, when like Grant Cardone, Jan LePage, Brad, so those people are on stage, you'll be able to get more out of it and you'll understand exactly what they're talking about. So the workshop's really, really popular. And we're almost at capacity for the room size we have. So if you're interested in that workshop, like I said the same thing about VIPs and platinums, like they're almost out, like same thing with the workshop. Like it's very, very limited.
Okay. So is that a link that you're able to send me and I'll just post in the show notes?
Yeah. So if you click on Sarah's link in the show notes, it will take you to the main, take you through Sarah's special link for the website, and you'll be able to access all of that stuff off Sarah's link. So just make sure you click Sarah's link in the show notes.
And you get 10% off with it.
That's right. Yeah, you have to use code Sarah.
Yes.
All caps.
All caps. Awesome. Awesome. All right, cool. So this event, when is it? What time is it at?
Yeah, it's May 26th to 28th. So we've got the workshop on the 26th and we got the 27th and 28th. And it is at the Metro Toronto Convention Center, right downtown Toronto, beside the CN Tower. I actually rented out the CN Tower for a special networking party we've got for the VIPs.
Very cool.
And then we've got the after party at Revel. So
Nice.
I rented out Revel, which is going to be pretty crazy because everybody enjoyed the after party last year. So this year we're going 10x for the after party.
Very good. Very good. I mean, it's a great location. You got lots of room and people can go train and subway it in or whatnot, right? So
Yeah, like
if you're
we've
local.
got, yeah, speaking of real estate square footage, like we've got 160,000 square feet we're working with.
Nice.
So
Nice.
yeah, it's quite the beast. Quite the beast.
Very cool. Very cool. Okay. Any final last words of advice?
Um, the entire multifamily world is coming to the Multifamily Conference. That's a room you have to be in. You will be unhappy with yourself if you do not come. So make sure you use Sarah's code, Sarah, and then click her link in the show notes.
Okay, cool. And if somebody wants to reach out to you directly for, questions about multifamily, where can they go for that?
Yeah. So the best spot, go to my YouTube channel, youtube.com/Seth Ferguson. We've got like 350, I think, videos, maybe 400 now on multifamily investing. And you can also find me on Instagram at Seth Ferguson Official.
Amazing. Seth, thanks for being on and excited to see how this event's all going to come together. And we'll see you there.
It's going to be huge. Thanks, Sarah.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larby. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?